let's start with the euro dollar today, right? So bigger picture, we have come down. We know we've come down to our level. We looked at 96 as we pushed a little bit past that. But we're at a level where we're probably going to see a little bit of relief. And you can see that we got a nice 3-bar reversal here, right? Inside bar from yesterday, we talked about that. This is a good example of, we're going to call it the Orsi fake break. I don't know what order this came in, but I'm assuming we went down first. This is a perfect example of the Orsi fake break, because bigger picture, we are at a previous level of structure. Again, a little bit below it, but this was that kind of 95 high, 96 level. If you guys are new, you probably don't know why we actually called this level. We did the analysis, when did we start doing this analysis? It was like 2 months ago? Like, we found this level and then we found like these fibs and all this other stuff. It was a very long time ago. So I probably didn't revisit it in the last week or 2 weeks or so, but this was the reason we kept calling 96, is this inside level of structure. And then we had like a bunch of Fibonacci retracements and stuff there as well. So we've come to that level, right? We've held that level. We had this candle right here. I'm talking faster than I can write, so just slow down, you're listening. We had this candle right here, which tested and probed it. And then we had our inside candle right here, our inside bar. And again, an inside bar is a bar that completes completely within the previous bar. If you're on TradingView, if you're on NinjaTrader, I have an indicator for NinjaTrader. I don't think it comes with the factory version. But usually there's an indicator on some platform that you can use if you're not good with spotting inside bars. It kind of just give you a arrow or a dash or something to show you where they're at. But inside bars are typically, inside bars are signals of consolidation, right? Because we have the mother bar, which is always bigger, and then we have the baby bar, the inside bar, which forms completely within the range of the inside bar. So it has to consolidate because the range doesn't expand. Now, what's interesting about this inside bar is, we talked about creativity yesterday. One of the things with inside bars is that, I do think you should have a bias. I don't think it's a smart idea to just bracket every single inside bar and wait for the breakout. I think it's going to be very difficult. So one of the things, if you want to take inside bars to the next level, is you want to have a bias. So you want to use your analysis. So typically in this one, right, we look at that inside bar, right, take away all the analysis, just look at these two candles. Would you expect a bullish or bearish break here? Again, disregard the structure and everything, just with the formation of the bars. Probably a bearish break, right? Market has been in a bearish move. Overall, it's in a bearish trend. Even the inside bar itself, right? Not only is the wick to the upside higher, longer than the wick to the downside, the body closes in the lower third. It also gives us a lower close than the previous bar, right? So everything here screams, hey, bearish break, bearish break, bearish break, except for the overall analysis. The overall analysis tells you that we're at a previous level of structure, and that could be the one warning signal that allows you to hesitate, not in a negative way, but to hesitate, maybe reevaluate, maybe look for more instead of being super aggressive about trading the break. And this is a perfect example of why, again, I'm a big believer in the what is not as important as the where, right? And what that means is that I don't believe that we should be going into charts and just looking for this, looking for that, looking for inside bars, hunting for certain signals. I saw the stupidest Instagram video the other day. It was the stupidest thing in the world, right? It was, and no, I don't apologize because it was dumb. I don't know who it was, but nothing personal, just a dumb video where they're showing, like, it showed their computer, and of course it showed, what do you think it showed on their computer? A winning trade, of course, right? Showed its winning trade. And then there was like, it zoomed out to like the guy's keyboard, and there was like this cheat sheet of like candlestick patterns, right? And yeah, and Here's the funny thing, Orsi. Well, I'll get to it, right? It was a cheat sheet to the candlestick pattern. It was one of these things. I forgot what it's called. I forgot if it was called like 3 blind mice or something. You might have seen this before, but it's basically 3 inside days where you get a mother candle like this. And then what you do is you get 3, imagine these being green candles, 3 bars that complete within the range. I forgot what they're called. I think I used to call them 3 blind mice or 3 wise women, something like that. I don't know. And then that's a sign of a breakout to the downside, right? I don't know if you guys have ever seen that, right? So that is a legit pattern. Don't get me wrong. That is a legit pattern. 3 inside days that, refuse to break the range, and then they break to the downside, right? So the trader had that in his little cheat sheet. He's like, has a pen and he's like hitting it and like, yeah. And then zooms back up the screen and shows an example of this winning trade that has this setup. But the stupidest thing, Orsi, is it wasn't even the setup on the chart. It was an invalid setup. It was an invalid setup, right? It was a bar like this, and then these things like engulfed the previous bar, and then it went down. It wasn't even the right setup. Like, if you're going to be a clever marketer, at least find the right setup. And my guess is that most traders wouldn't catch it. Like, I caught it because I know what it is. But it's like, I'm looking at it, and I'm like, oh, here goes the Instagram ad, whatever it is, and I'm like, wait a minute. That wasn't even it. That wasn't 3 inside days. No. But again, that ad isn't marketed towards me. It's not marketed towards you guys, not towards the educated trader. It is marketed towards the new trader that just says, oh my gosh, wait a minute. And then the caption was like, forget about all that stuff they teach you. Learn this and you can really make profits. Right? Sheesh. But the point is, too many traders kind of go around hunting for that certain thing, right? And no doubt when traders see that video, they take notes of it, they write it down, they just go in the market and they look for every situation like that, completely ignoring the overall trend. Completely ignoring the overall trend, right? That's like turning on a sporting event, not knowing the score, catching that one little 5-minute period where the team that's getting slaughtered actually plays good, and you start betting on that team. And then you realize that team has been down by 50 points the entire game because you never actually took a look at the box score, right? It's dumb. But you need to do your analysis first. You need to have overall perspective of the market first. Once you have overall perspective of the market, once you have a bias, right? A positive confirmation bias of what direction you favor to be in, right? Where do you think the market is going to go? You identify, you predict, right? All that fun stuff. Then you start looking for the thing when it's time to decide. When it's time to decide, hey, how can I get short? How can I get long? That's when you look for the thing, whatever that thing is. And when you get something like this, where it's like, oh man, this if you look at this first and just say, oh, inside bar, lower third, inside bar, bearish break, right? When you get that by itself, you may be screaming bearish breakout. But when you look at the bigger picture, you're probably like, yeah, it's everything screams bearish breakout. Well, are you going to get involved? No. Well, why not? Well, because we're at an inside level of structure on the weekly, and I can't. That's when you get one of those deals where it's like, man, I love the setup, but the location's bad. Location's bad, right? So anyway, the Orsi fakie break, right, is this. And this was, we talked yesterday a lot about the book called Street Smarts, which is, again, a very underrated book, at least in my opinion. I don't know if my taste is the same as other people's taste, but I really enjoy Street Smarts. It's one of the few technical books that I enjoy. There are not a lot of technical books that I like out there. Although, to be fair, I should go back and give books a different chance, because when I first started off my journey reading a lot of technical books, and let me know if you guys are the same. I started off my journey reading a lot of technical books because I was, looking for the answer. And I didn't like a lot of them, but I also didn't really know what I was looking for. Like, I probably judged it off like me reading something, me trying it in the market, losing money, and then being like, oh, this was bad, right? So that's not really a fair judgment. But I flocked to more books on psychology, on mindset, on process, money management, risk management, stuff like that. And then I did go back later in my years and reread some technical books or dig into more so like classic chartist type of books. That's just mainly my style, and I did find them helpful. So maybe I'm a little bit biased on the technical books, but Street Smarts was a technical book that I enjoyed because I do like kind of the classic ways of trading the market. And One of the inside bar breaks they talked about in that book was the fakie break, right? So imagine if your classic inside bar strategy, right, non-bias, we'll take the bias out of it. Let's say you're bracketing the mother bar, right? So you've got a sell stop, excuse me, a buy stop up here, where if we break out to the upside, you buy. We got a sell stop down here. If we break out to the downside, we sell. One of the methods discussed in that book was the fakie. So I'm assuming this happened first. I can go down to a lower time frame and check, but I remember watching this yesterday. I'm assuming we had this break first. So in this scenario, you would have been triggered to the downside, right? Once you're triggered to the downside, the upside order becomes your stop loss. Does that make sense? The cool thing is it's already a buy stop, right? So you don't have to put another one in. It's already a stop loss because we're buying into the direction, right? So once this gets triggered, what you would do is you would increase the order on here, kind of like a stop and reverse. So instead of if you're trading one in, one out, you would increase this to 2. That way, when this gets hit, you're out of your sell position, but now you're directly in a long position under the anticipation that this was a fake breakout. And after a fake breakout, right, we should rally in the other direction. Now, if you want to take that to the next level and save yourself a little bit of money, because you don't always want to lose the need to win, right? If you have that bias, if you have that red flag, that caution that says, hey, I'm only looking for fake breaks at this moment because we're at a level of structure, right? Now, what you're doing is instead of having an order down here, you're just waiting for that probe, that signal of if we press lower than the mother bar, then get buy stop above, whatever pips above the high of the mother bar, and then you're only looking to get triggered in that opposite direction. Does that make sense, guys? That's if you're looking for that fakie break. So that's the fakie break that Orsi's talking about. And it's, again, it's not every inside bar. It's only ones at previous level of structure, because a fake break here is more important than a fake break in a random location. Again, any other location, we'd be thinking bearish. Any other location, I'd be like, man, forget looking to the upside, only to the downside, right? You crazy? But we know specifically that we're at an inside level of structure. We're at a level that we identified before. We know that the market, or we predicted that the market is in for some relief. Now that fake break kind of confirms it, because guess what? Late sellers are hiding down here like, oh my gosh, Akil was right. We should be selling, right? But they're too late. They're too late, right? And now they're getting skunked out of the market for those buyers who are either buyers because they're actually interested in this level, or buyers who are, what's the other type of buyers, guys? Two type of buyers at this level. Buyers that are actually interested in buying at this level, and the other buyers are what? Yep, sellers. So previous sellers who made a bunch of money and need to buy to exit their selling position and make profit, right? Orsi said also the ones that probe beyond the mother bar's lows are more powerful than beyond the inside bars. Yeah, should have mentioned that there's two types of inside bar breaks. I always default, I always do the mother bar. There's two different ways you can trade. Well, there's many different ways, but two traditional, I guess, ways you can trade inside bars, right? One is going to be you bracket your orders above and beyond the inside bar highs and lows like this. The other one is above the range and below the range of the mother bar. So I always default to the mother bar, but there are different ways of doing that. So Orsi just said, hey, the ones that are more powerful are not just the ones that probe the inside bar lows, but probe the highs and lows, or highs or lows of the mother bar. So cool stuff there. I thought that was a good example. So let's go down to a lower time from now. Let's finish up on this prediction, right? So if we are going to get that fakie break, if we are going to get a little bit of relief, right? We identified that. The next question is, where is this relief likely to go to, right? Shoot me some digits, right? What do you think? If we're likely to go up and give a little bit of relief, where would you say? Where would you say? Keep in mind this is the daily chart, but we want to make this prediction. Prediction. John, where's your moving average break on the daily? Right up here, John. Ooh, baby. Look at that. Bobby says 98.50s. 98.50s. Right there. Or she says 99-ish. Ooh, take Take that, Bobby. Take that 99s. Helen says 98s even. Ooh, Helen's going to get right below you. Price is right. Going to underbid you. Anyone else? Anyone else? Anyone else? Now we got a few things we could do, right? One, let's see if our volume profile gives us anything. We'll take this most recent swing high to swing low. See if anything spikes out at this level. Ooh, let's do this. Let's go from here to here. See if anything stands out to us. We got a volume spike right in the middle of a consolidation, which is what we would expect. And that's going to be back at parity. We can take our Fibonacci's, right? Fibonacci retracement, swing high to swing low. Got a 382 right in the middle, 98.55. 50%, a little bit higher, right? Volume spike between the 50% and the 618. Let's take a Fibonacci retracement from this most recent swing as well. And we're going to have a 50% retracement right at this level. So nice level to look for, my opinion, would be right here. The mesh point between our previous new structure low, this little doji consolidation right here, our 3D2 and our 50% confluence, which is going to come right at about 98.50s, what Bobby said, right? All right, so let's head down to a lower time frame. Let's see, is there any opportunities for us to get involved? Well, we already had one. We had a 2618 type trade, right? Not a true 2618, but a 2618 type trade. And I'll tell you why in a little bit. So we had price action come down. And then what did we do right here? Did we have a double bottom? Did we ever have a double bottom? It looks like a double bottom, but remember, we have rules for that. So this isn't a double bottom. This is technically not a double bottom because we broke and closed below. So what we have is we have a violation to the low side here on the 4 hour, but then we come right back and we violate this level to the upside. We have a retest right here, a nice little probe, again, probably comes to a 3D2. Up 3D2, 50%, holds at 3D2, test at 50%, and then we have a move higher. So not really a way to enter this unless you're super aggressive and using a buy stop above this. But what you would look for here is, again, you got to wait for another fresh break and another reset. So another breakout to the upside, another reset right here. Now, again, there are aggressive ways to do it. You can put a buy stop right there on the breakout of this kind of potential double top as well. Right? Going to be hard to get a quality risk reward doing that, however, because you're going to be looking for something like this where you're breaking out. You got to have stops, in my opinion, at least below that candle. I'd get them below this probe right here. We're only looking for 98.50s, so it's going to be hard to get a one-to-one there. So probably not the best idea. That's why I prefer to look for a pullback. That way you can get a better trading opportunity, or better risk reward, I should say. Now, we do have something here, though, however, just to pause and get you guys even more confused. If you guys remember our conversation from yesterday, all these days blend together. What do we have here from yesterday? Who can see it? I'll give you a clue. I just made it bigger. Who remembers? I know your brain's probably melted after the session. Who remembers? Remember our stochastics strategy development session we did? Yeah. Hook. The hook. I'm making it with my arm right now. I'm glad you guys can't see it because it's embarrassing. But I'm standing in front of the microphone like hooking, like Captain Hook. Arr! Yeah, we got the hook. We got the K on the upper side of the D. I don't know if we have MACD confluence. We probably don't. That was something we played around with. We don't have MACD confluence, so you wouldn't get a signal if you were acquiring the zero line break here. But yeah, we got the hook in the direction of the D here. Assuming this holds, right? You got to wait till this candle closes, obviously. But that could be an entry signal as well. Again, just kind of revisiting that strategy development session and doing kind of a practical application so you guys can see it in real time. But let's go down to an hourly and see if there's anything we could have done here. Now, again, one of my favorite practices is kind of doing a post-market review and asking yourself, okay, you know, and this is still a valid opportunity. Again, in my opinion, we're going to need a fresh break. So we're going to need a break of this level, and then we're going to need a pullback, right? So we're going to need something like, sorry about that. We're going to need something like this, and then some type of pullback. But maybe you want to ask yourself the question, was there a way I could have gotten involved in this trade before? You guys see anything here? Anything you could have used? I see two things that happen to occur at the same level, but I'm not going to spoil it for you. You guys see anything? Do you see anything? Do you see anything? Bobby's typing, Orsi's typing. Yep. Inside bar and higher high, higher close. So let's say, again, you're a pullback trader, right? You got your fresh break right here. Again, this would be an aggressive pullback because you don't have a confirmed trend. You just have the violation. Pull back to here, right? You've got your pullback. And then you have two things, right? One, you have another inside bar. You have two of them right here, right? This is one right there. So this could have been this would have been your losing inside bar trade, right? Even if you were going to the upside, because I believe it spiked to the upside first. But right after that, you get another inside bar opportunity. So you took one loss. You get another inside bar opportunity right here. This one does break strictly to the upside. So again, that could be an entry reason. If you're more conservative, that's also a higher high, higher close. So now you're in that same trading position, but instead of having that poor risk reward because you're waiting for the breakout, right? You've got stops below here. What's our number? 35. So we're looking at 96.07 as a stop loss. You're looking for a continuation up to 98.50s was our target level, 98.50, 98.55s, right? Much better risk reward. Anything else we can add to the equation here if we want to kind of maybe make an adjustment to our targets? Again, we got this zone right here that we identified in the higher time frame, but we always want to dig in and become more precise as we go lower. Yep, Fibonacci extension. Let's take a Fibonacci extension from our swing low to swing high. Boom, boom, boom. Bang, bang, bang. Right? Maybe I don't have my 1414 up, but maybe you adjust for the 1414. Hey, maybe you say, you know what, Akil? I want to be super conservative and just go for a 127. You can still get a good risk reward here at the very lows of this. And again, that's going to be a personal decision based off your risk appetite. You could also do a 1-to-1 measure move projection. That should line up with a 1-6-1-8. I always forget about the AB equals CD. Been doing this too long. I kind of, the gift and the curse is I kind of can see where this stuff is at already. So I often, it's funny, my mentor did this as well. Becoming just like him, where he would see stuff and say stuff, but then not talk about it. I'm like, well, how do you know it's there? Getting to the same thing where when you do the same thing over and over again, you can kind of see it. So I'll often do analysis where I'll be like, yeah, there's an AB equals CD right there at the 1414, but without actually drawing it on, because you can kind of, you train your brain to see these patterns, which is kind of cool. Bad from a teaching perspective because it leaves you guys blind. But yeah, so there are two options right there. Yeah, I would say if you want to be conservative, you could have adjusted to 9809s or 9810s. Maybe even the 98 even handle. That's the slippery slope of going that low. But that was Helen's, I believe it was Helen's target, 98 even. Still get a positive risk reward, Helen, 1.24 to 1. And then if you're more aggressive, that AB equals C, that 144 with that 98.50 level with the psych number there. And again, our 382 and our 50% confluence, which I took off the chart, is going to be there as well. So again, good practice. We talked yesterday about just the importance of, of course we want to be in trades. We want to make money off trades, but the most important practice is fine tuning your skill of predictive analysis, because that's what's going to stay with you bigger picture. So still a good opportunity here. I don't think we need to take a look at the range bar chart. I kind of want to. So I got a question real quick, and then I just want to load up a range bar chart at the same time because I'm always curious. I love the range bars. I love them. But I'll load up one that's sort of equivalent to the hourly, probably a little bit lower, like a 30-minute one. But my ranges are taking some time now because I think I have it set to 200 days instead of 10 days. Raphael says, Akil, can you please repeat how is that entry an inside bar plus higher high, higher close? Sure. let's delete this. So the inside bar, there's two of them. One would have failed, one would have won. Here's one inside bar right here, the little green guy, right? That would have been a failure because you would have broke out to the upside first. Again, I'm assuming first. I'd have to go back to the lower time frame and check it out. But you would have broke out to the upside first here. Sorry, give me a second. I'm trying to load the chart up. The second one is right here. So here's your inside bar, this green one. You can see it completes completely within the range of the mother bar. The mother bar is this red one. So that could have been an entry reason, that inside bar break. On the same exact bar, just at a different level because you have to wait for the close. This is a higher high, higher close, the bar that comes directly after it, the big green one. Let me know if that clears things up. Yep, you're welcome. Cool. Any other questions on euro dollar? Of course, if you're a counter trend trader, you can look for a counter trend trade here, right? If you're someone that's looking short, you got a double top. Of course, you want to refer to your qualifiers on the double top as far as depth of retracement and overall level, but that can be an option for you as well. But any questions on euro dollar before we move on? Still trying to load up my range bar chart, but I accidentally loaded up like 200 days, so my computer is going to hate me. I typically don't do more than like 10 days max on a range bar, but it's gonna, I'm sorry. Yeah, it's not very happy with me. All right, let's move on to, actually, let's put this into the, let me get this into our trade floor as well, pro trade log real quick. I'll tell them to watch the video, but let's just give them an idea of what we're looking at. We're looking for a fresh break, retest, and then a move up to 98.50. Let me get this in here, and then we give some time for that range bar chart to load up, and then we'll move on. Again, I'm gonna go in order for my pairs. But if there's something specifically you want to take a look at, let me know, and we can bounce over there. So